First of all, just generally speaking, when you see Trump saying that he had a great call with the Commission president of the European Union, that he's going to delay the start of those 50% tariffs, what does it do in general for consumers in the United States and for the companies that you're advising?
So I think mostly with all the news that we hear day in, day out from Trump, there's a lot still of uncertainty, and you can see it through the consumer. So one day we hear one tariff from one country, but another day we hear something else. There's postpone on dates as well. It just makes the consumer even more shaky, and I think that's what's going to continue through this whole summer. As well for the retailers, I think the retailers are taking an approach of they can handle what's within their power, and if it's a global company, they are looking to other regions of growth, or they're looking to see where strategically they're going to take the hit or where they're going to increase their price.
Brian, when we're talking Walmart and its massive reach, for it to discuss tariffs to the extent that you heard the CEO on the call saying, look, we're going to have to pass along some of those cost increases. I mean, a lot of these consumers will pull back on spending, not just at Walmart, but across the board. How are you thinking about the tariffs, the trade war, and where we are in the uncertainty game?
Yeah, well, good morning, Contessa. So, I just want to be clear. I don't officially cover Walmart. I have a colleague that does. Obviously, I cover a number of retailers and consumer spending broadly. And I totally agree with what Jessica says. I mean, the key word here is uncertainty. It's both on the part of the consumer as well as these companies. I think every day we get more whiplash back and forth, that level of uncertainty increases. So today we're feeling better, because we're waking up to the news. I guess we got it yesterday on the holiday here in the United States. That there's now, we're pushing back these proposed tariffs on the EU. But on Friday morning last week, we got shocked by this announcement. It's just this back and forth is causing a great deal of uncertainty out there. I think it is weighing upon consumer spending. And as I'm talking to these leading retailers, and like you said in your opening, we have a number of them reporting this week. They don't know what to do because they really can't manage their business when they're basically at the whim of what may come out at any hour.
What are you hearing from the companies that you cover about demand trends from consumers and about whether there's already been a pullback in spending? What kind of color are they giving you on current quarter?
Yeah, so the way I would characterize spending is, look, I think now I want to make sure I'm clear on this: discretionary spending, right? Because in my coverage universe, I cover primarily discretionary companies as opposed to need-based retailers. But look, the way I think this sets up is we had a kind of a weakish, so not great spending dynamic late into last year, into 24. And then as the trade rhetoric really started to heat up, that weakish demand backdrop has turned even weaker. And so when we're hearing from companies as they're reporting, and again, we'll get more updates on that this week, I think we're hearing these companies say that, look, the consumer's cautious, particularly on these more discretionary, larger ticket type items where the purchase can be deferred. Now, there is one silver lining, okay, and we have seen some of this. I think there actually has been some pull forward in demand, as consumers, watching the news like we are, buying ahead of tariffs.
Yeah, I mean, the discussions at my house was like, do we buy the Apple Watch for the adolescents now and just hold them? We're not quite ready to give them to them yet, but should we just buy now and save the 25%, the 50%? What's it going to be? Right, exactly. Let's dive down into some names. Who's likely to impress? Who's likely not to impress? And who are you thinking of right now, Jessica, might be just a wild card?
I think in terms of impress this week, Dick's Sporting Goods. They sit still in a bright spot. We do like the acquisition that they announced most recently, the Foot Locker. It's sport. The consumer is still very much interested in sports, and they're participating. I think there's a lot about...
Because there's an experiential side of that, right?
We're talking a lot about, to our clients and all around, a loneliness epidemic. And so if you think of running clubs, if you think of racket sports, it brings the community together. People are dating in a different way. They want to... It's a tough time. You still want happiness. There's a different sense of wellness. So Dick's Sporting Goods sits in a really bright spot. Who I don't expect to be impressed by is Capri at all. I think it's great that they're selling off Versace, but Michael Kors is still in a very tough spot. And the wild card is Ulta. I think there's a lot of misconception about beauty right now out in the market from what I've heard. I think beauty is a bright spot. It's just beauty will shift. It's normalizing. And also beauty is replenishment. You're going to replenish your moisturizer. You're going to replenish your eye cream. And they're more expensive.
It's interesting that Ross said it's one of the most important segments of its business. It's suffering. Its stock was down about 10% last week. When you look at the off-brand or bargain-priced stores, do they have an opportunity?
I think they do. Again, as both Brian and I have mentioned, the consumer is very much in a shaky place. The way that they're going to spend is going to be extremely strategic. They were doing that last year, and off-price does become a winner. In terms of Ross, talking about beauty, their assortment, anytime we've been walking into a Ross store, has been phenomenal. It's almost incredible. It's at the way how Marshalls and TJ started.
Yeah.
So it's a category, again, in general, that everyone's going to tap into.
Brian, I wanted to talk to you about one of your picks here, AutoZone, because I'm seeing it as it's a pick on CNBC. It's a pick. What about AutoZone right now, which is reporting earnings, I think that today, sorry. What about AutoZone do you really like at this moment?
Yeah, so AutoZone is going to report in a couple hours. Look, I think the auto parts retailers, they're well positioned here in this, very uncertain, very fluid tariff dynamic. I mean, these companies have a lot of pricing power. They can, effectively, and they have effectively passed along higher costs, and oftentimes, those higher input costs serve as a sales growth driver. Okay, so I think AutoZone's actually in a position, so to say, capitalize effectively on tariffs. The other, this goes back to what we're talking about as an uncertain consumer. I mean, there's a counter-cyclical nature to auto parts demand. Typically demand for aftermarket auto parts improves or strengthens, in weaker economic backdrops simply because consumers hold on to their existing cars longer and then do the maintenance on those cars. Yeah. So I think that's, to me, look, AutoZone's still cheap. I've liked AutoZone for many, many years. I just re-upgraded it not that long ago. And I mean, one key point here is I think relative to other names in the space, AutoZone stock remains quite cheap.